Welcome back. Now, Santam has had a strong first half. During the period, headline earnings per share shot up by 19%. This as all the insurer's business units exceeded last year's performance. Looking ahead, while acknowledging that economic growth faces geopolitical risk, the group expects this momentum to run into 2026, owing to an anticipated easing on consumers' disposable income. A dividend of 590 cents was declared, reflecting an increase of 10%. Company CFO Wikus Olivier joins us with his assessment of the numbers. Wikus, thanks so much for your time this afternoon. So really an upbeat first half with double-digit growth, earnings growth that is. The group's underwriting margin also almost doubled to 11.3%. How has the company managed to deliver such upbeat numbers in this kind of environment?
Thanks and good afternoon to all of your viewers. So yes, there has been a very strong result for us in the first half of this year. I think from a top-line growth perspective, premium growth, we have seen the benefits of our new refresh strategy coming through. By making sure that within South Africa we remain dominant within the broker market, but that we continue to grow in those areas where we don't have a fair market share at this stage, and particularly focus on the direct market and also within the partnerships business. And then we are also driving our international strategy of diversifying and growing outside of South Africa.
Yeah.
And there we've seen very strong growth of 25% coming through. From a profitability perspective, we have had a little bit of a wind from behind in that we have seen a very benign claims environment in the first half of this year. So we didn't see the sizable weather-related claims that we had in the first half of 24, so that helped us a bit. But despite that, from a business structural perspective, we are seeing the benefits coming through of all of the underwriting actions that we've put through over the last few years, which have improved the profitability of our in-force book. In addition to that, we are also growing in those lines of business where we can earn a higher margin. And that's particularly within the direct space and also within partner solutions.
And
then lastly, we've also been very much focused and clear that we don't follow the market where we believe pricing is not sustainable, and that's within specialist lines in particular. So we have been sacrificing some top-line growth there, but it meant that we protected the profitability of the book in that space in particular.
And just drilling in on that claims picture, Wikus, you've mentioned that, we didn't see the big claims we've seen over the past 2 years because there wasn't really big weather disasters, but we did have those heavy rains at the top of the year. Is there anything that you experienced or saw when it comes to the personal and business segments in your business off the back of that?
Yeah, I think so. So first of all, insurance is volatile. Weather conditions we've started getting used to is very volatile. So we definitely didn't see the major weather events that we saw in the first half of last year.
Okay.
But then we've also been very deliberate from an underwriting perspective to make sure we focus on business that's less exposed to severe flooding, etc. So we have been at what we call our geocoding exercise, which is very much making sure that we really understand the location of properties and what the risks associated with that from a particular climate risk perspective. And we have been avoiding those specific areas that we felt is very high risk, and you can't really charge appropriate premiums for the related risks. So that has also helped us to avoid some of the claims that we otherwise would have incurred even in this half of 2025.
And talk to me about, you touched on this at the top, just the tightrope when it comes to making sure that insurance is affordable and not contributing to the insurance gap, and also just remaining competitive, right? The group has had a number of initiatives to reduce the impact of, claims inflation, especially in an environment where consumers are under pressure.
Yes, driving inclusive growth for us is extremely important. If you look at the South African market in particular, a large number of people don't benefit from insurance, which is one of the most important wealth protection measures that you can have. So we're very much focused on, first of all, from a product innovation perspective, is really focusing on developing products that speak to the need and affordability of certain market segments. But then within our own business, we also focus continuously on becoming more efficient. So we are driving a number of cost efficiency initiatives. We are working with partners in the insurance, in particular the motor value chain, to make sure we bring down the cost of repairs as well. So the lower we can get the cost base, the better we can price and make premiums also more affordable.
And is that why we are seeing that kind of growth we're seeing in My Way at the moment?
Yes, so My Way has also been driving specific strategic initiatives. In 2023, they launched a agency initiative focused on small business insurance. And they've also been very much focused on driving the visibility of the My Way brand to drive inbound sales. And both of those initiatives has really been successful. So their 14% increase in gross written premium is not a function of them increasing premiums by that much.
Okay.
It's actually mostly driven by increasing policy count and client numbers within the business. So they've definitely been winning market share in the last 6 months.
And just on the conversation around these strategic partnerships, about a month or two ago, Santam announced a strategic partnership with the UK's Lloyd's. Walk me through the merits of that, union, that tie-up, and how you see it boosting growth moving forward.
Yes, so Lloyd's is for us a key part of the third part of our strategy that's focused on international diversification and growth. So at the moment, we already operate outside of South Africa through Santam Re.
Yes.
And then also in our specialist business across Africa in partnership with Sanlam Allianz. Now, Lloyd's is effectively one of the biggest insurance platforms in the world, where you get access to more than 60 billion pounds of annual premium written through that market. So for us, it's a key part of being part of that ecosystem and that access to business that we otherwise wouldn't have been able to tap into. So that's a third part of our international growth strategy, and it will be complementary to what we already do through Santam Re and specialist lines of business. So it's not to compete with those two areas, but actually to operate more globally than what we do today.
All right, let's leave it there, Wikus. Thanks so much for your time and taking us through the 6 months that was for Santam. Now, that was Santam's CFO, Wikus Olivier.